Hi, I'm Mike Becker with PIA, joined today with Brad Latchett, Director of Government Industry Affairs for PIA Northeast. That's the PIA affiliate servicing members in New York, New Jersey, Connecticut, New Hampshire, and Vermont. Brad's been with PIA since 2012 and spent his day getting into the fine print of insurance, whether it's the regulatory or legislative side or also the industry side. So he's a great guy to talk to about some of the emerging issues and coverages that are popping up specific to the COVID-19 outbreak. So Brad, thanks for doing this. We're going to jump right into this. The elephant in the room, the question that seems to come up the most, coverage side, is business interruption. And can you just talk just for a minute about that and see, is it applicable in this scenario or not?
If I have to, Mike, I will. You're right. This is the one that comes up the most, probably I've read the most about it. The answer, unfortunately, what we probably all know is that there's no coverage, generally speaking, for business interruption. Your typical business interruption policy is going to have a requirement that there be physical damage to a building, for one, which obviously when we're dealing with a virus, generally is not the case. The vast majority of courts have held that viruses do not cause physical harm to a building, so that would not trigger business interruption. Now, there are some courts that have said, yes, if you cannot use a business, if you cannot get into the building, it can be a physical loss. Now, that's the minority. So even if you have that, though, there's this other trigger, the second kind of gut punch, if you will, that says that it's got to be from a covered cause of loss. Now, viruses like COVID are specifically excluded as a covered cause of loss. In fact, ISO endorsement is mandatory for any carrier that uses ISO. It's going to be on that commercial policy. So even if you do have some court agree that say, yes, viruses can cause a physical loss, it's not going to be covered cause of loss. So no coverage there, which creates obviously a lot of issues and a lot of controversy now with trying to find some solution.
So I know much of the industry is spending a lot of time talking about business interruption, yourself included, of course. What other coverages are you seeing pop up that are relevant to this COVID-19 outbreak, particularly on the commercial side here?
Yeah, so obviously we've seen a lot of disruption on the commercial side, right? With more and more states mandating that certain businesses close down or workforces work remotely. So we're seeing an issue with the vacancy provisions in a lot of commercial property policies. In short, and this depends a little bit on who the policy is for, the tenant or the person who actually owns the building, but that states that if you're using your building for less than 31% of its customary usage, so let's say you're a bakery and less than 31% of the building's being used as a bakery, it could be considered vacant after a period of 60 days. Now, we've got a government mandate in place that shut down building. I think we're looking at a little bit around a month right now. So, I mean, if this goes any further, you could certainly be hitting that 60 days where you might have businesses, bars, restaurants, anything really, or retail businesses that either are not operating or are operating at a significantly reduced capacity. So think about like a regular sit-down restaurant that no longer has their bar going, no longer has their sit-down dining room going, but they have their kitchen. How big is their kitchen as opposed to everything else square footage wise in their building? Is it less than 31%? If it is, this could trigger vacancy even though they're actively using their building for food. So that is an issue. I think you're going to see hopefully carriers respond in kind and say, okay, we're going to waive this, but we are keeping tabs on it and making sure that the insurance departments in our respective states are aware of that particular issue, because we certainly don't want businesses to lose coverage through no fault of their own when they can't get into the building.
Right now, in some of those restaurants are now offering delivery service.
Yeah. Yes, I actually know that well. I've gotten delivery many nights, support
Right.
local economy, right? So a lot of the businesses who never contemplated doing delivery before are now doing it because they really have no other option, right? Be that someplace that we can traditionally think of doing delivery like a restaurant, but it could also be liquor stores. Not that I have done liquor delivery, but
I'm
not opposed to it. Not opposed to it, that's for sure. I also know there's an arts and crafts store down the street from me that's doing delivery now too, and I'm sure they never did it before, but now that's the only way they can get somebody to buy anything is to deliver it to them. So you're having a lot of businesses that might not have done it, doing it now, which leads to another insurance issue, which is the hire to not know. Now, most businesses who did delivery prior to this probably have hired and non-known coverage. In short, it's when it's coverage for an employee who might be using their personal vehicle to make deliveries for the business. But if you have businesses that never contemplated doing delivery before that are now doing it, chances are they might not have that coverage and they could have issues. So my suggestion to our clients, or I'm sorry, to our members, to their clients, is check with your businesses, see if they're doing delivery now, and let them know that they may have this exposure, because I guarantee they're not thinking about this.
Right. So there's an issue that affects both potentially commercial lines and personal lines, which is these delivery exclusions on the restaurant side, the commercial side, but also who is delivering it. Is it a personal auto? So great things to be aware of. We are well aware of what's going on in the restaurant community with these deliveries. Vacancy, that's a great tip. What other types of coverages are you hearing about still emerge, though, outside of these?
Yeah. So kind of related to what we just talked about with the hired and non-known, there's a provision in some personal auto policies, what I'll refer to as a step-down provision, which reduces coverage if somebody uses their personal vehicle for a commercial purpose. That's why we generally, like a delivery exclusion sort of thing with Uber, it's slightly different. So let's say you had a policy that had 100, 300, right? You happen to be delivering, let's say, arts and crafts for your business to somebody. You get in an accident and your policy has a step-down provision. You no longer have 100, 300. You might have the state minimum, which let's say it's 2550, so much less than you had anticipated and what you were spending for. The argument is the carrier is going to say, well, we didn't think you were going to be involved in these activities, so we're not going to cover you for it. Well, I guess the counter argument is these people never intended to be involved in these activities. They're almost forced to do these deliveries to keep their business going. They're using their personal vehicles to do so. They don't have hired and non-known, for one. And now they could get dinged on their personal auto because of that step-down provision. Now, I have heard that there are a few carriers that have waived those provisions in their policies, and not every carrier uses these. If you have an ISO policy, generally speaking, there's not going to be a step-down provision. But if you have a carrier that has used their own form or customized some of the endorsements, it might be in there. So it's something certainly for our members to look at the policies to see if it's there. Because again, you might have somebody doing deliveries in their personal vehicle, especially if you happen to have their homeowners and their business.
Right.
Do the math there and see. If they don't have hired and non-known and you also have the personal auto, check that personal auto.
That is great advice. Appreciate that. Some of the things that we've heard about in the news recently are some cyber issues with some technology companies that happen to be great for work from home scenarios. You hearing anything on cyber?
Yeah, I think the biggest thing I'm hearing right now is the NFL draft, right? They're very worried about cyber hacks and NFL draft, which
right.
I'm very concerned about as a Bills fan, because this is a big one for me. I feel like we finally got a window.
This is your year.
Yeah. I'm guessing our members don't so much care about that, what the Bills are going to do in the second round. They probably care about something else. But with cyber, this is, I think, a huge area now that I don't know if a lot of people are thinking about. Cyber, at the best of times, is one of those coverages that people don't really think about that much because it's complicated, right? I don't know all this stuff, Russian hackers and that sort of thing. 2018, there was 450 million business records that were hacked or were subject to some sort of cyber breach. And that's under the best of circumstances. Now we are not in the best of circumstances whatsoever, right? We have got businesses who never contemplated doing remote work, now being forced to have their employees work from home. For those businesses that were prepared for this, that's great. Their exposure still increased. So you got to watch out for that. For those businesses that weren't, it's even worse, right? So if your cyber risk before was a 10 and you happen to have 10 employees, multiply that by 10, right? That's how much it is. Especially when you're talking about something like operational risk, which is the technology that you might be using to get work done to connect to clients, that being compromised by a hack. When you're in your traditional agency setting or whatever your business is setting, that's obviously an issue, but maybe less so. Okay, your server goes down, I can still do things by calling, by doing paper, by doing fax, that sort of thing. But now that we're all reliant on, remoting into a server or using some sort of technology, be it Zoom or other thing to send information, there's really no other alternative, or at least no other quick alternative to get the job done. So that operational risk skyrockets. And then that's ignoring all the other cyber risks too. So just that aspect, it's a major thing that every single one of a producer's clients is going to be impacted by. And it's especially worrisome for your small businesses who might not, again, be sophisticated enough to realize that, Bob from accounting should not be opening that email from the Nigerian prince,
Right. Great point. That affects, of course, insurance agency in and of itself, checking your own cyber coverage, but also that of your insured. So really great information, Brad. Thank you. Brad is actually putting this out as a full 1-hour CE webinar in 5 states: New York, New Jersey, Connecticut, New Hampshire, and Vermont. It's also been submitted for CE in Pennsylvania. So it's a great CE online course that you can take from Brad. But Brad is also making this information, the full hour-long webinar in non-CE, but just for background informational purposes to all PIA members. So if you want to take a deeper dive into this conversation and hear what Brad has to say on this topic, we're going to make that available to you. So thank you for doing that, Brad. Thank you for being a PIA member. We hope you're doing well. We look forward to connecting with you soon. Brad, thanks. Have a great day.